Welcome, everyone. Juan, I give you the floor first
Okay.
to introduce the webinar.
Well, good morning, everybody. The objective of this webinar, and let me put first the presentation, is the financing of district renovations of privately owned affordable housing from the perspective of a financial institution. And we will have a discussion later with two participants, which will see this from two angles. One angle will be from a commercial bank, ENG, and another angle will be from a company that tries to develop the market of building renovations using innovative financial systems. And I will present myself the angle of the public sector. I mean the public financial institution. As I worked many years in the public financial institution, I will present this angle as well. So you will have these three different angles, which I think will allow you to have we hope a broader view of the topic. In addition, Alvaro from Gini Finance will introduce Shape Europe and the activities that we are carrying out in this context. So let me first start by presenting briefly. Alvaro will develop that further. What is Shape Europe initiative? The Shape EU has as objective to support the EU Affordable Housing Initiative by offering one-stop shops to local leaders, develop guidelines and blueprints on different topics. One of them is finance, which is the subject of this webinar, provide support to the promoters of this affordable housing initiative, share knowledge and spread the word and communicate. And more precisely, the EU Affordable Housing Initiative is part of the renovation wave, which I think you know very well. And one particular aim is to pilot 100 lighthouse renovation district focusing on creating quality, liability, affordability for homes, for the affordable homes for people, and mobilizing cross-sectoral project partnerships. So I think it's an initiative with a significant, a larger scope, which will cover all over Europe. Now I move to the first. Let me explain why we focus on private affordable housing. Other webinars will develop the social, public, or non-profit segment of the housing, because the privately owned affordable houses accounts for the large share of the total affordable housing. As social housing, including cooperative and public housing, just accounts for 11% of the total housing in the EU. So that means 89% is privately owned. Obviously, privately owned covers affordable and non-affordable, but a significant share of the privately owned is affordable housing. There are many initiatives promoted by local or national authorities to renovate private affordable housing. And we have many examples of this already in Lithuania, in Romania, or in Spain. I mean, in Lithuania, I think it's a well-known initiative, which I will develop later. Romania, I think, is less known, but in Bucharest, they have renovated a large number of districts in the less wealthy, in poor areas, basically, of Bucharest. And in Spain, we have also examples of private affordable housing, like in the area of Barcelona. Financing has played a substantial role to facilitate these renovations. Grants is an important component. which have gone up sometimes to 100% of the cost, particularly for vulnerable and low-income homeowners. This is the case, for instance, in Romania, as most of these districts were inhabited by low incomes. Practically all the cost has been financed by the public sector of the renovation of these buildings. Different steps to involve financial institutions in a district renovation project. Again, seen from the angle of a financial institution, first, the financial institution will like to know who are the borrowers that he has to lend to. And we distinguish two types of borrowers, homeowners or homeowners associations in the case of condominiums. In the case of condominiums, we have particular issues in terms of the legal nature of the association and the regulation of these associations, notably its ability to borrow from financial institutions. So there is more offer from financial institutions to homeowners than to homeowners associations, because they have particular credit risk different than homeowners. Another aspect that a financial institution will look at is the credit quality of renovation loans, credit history of renovation loans, the financial situation of the homeowners or of a homeowners association, and possible collateral that can be pledged as a security to pay the loan. Although in many cases, the financing for renovations is unsecured loans, which has specific risk and cost. Next slide is a more focus, as this is the objective, the main objective of the share.
Sorry for interrupting you. I think you didn't start sharing the slides, and maybe you want to share your screen to all the participants.
I'm not sharing the slides?
No.
Oh.
No, I believed you wanted to continue without the presentation, but now you are.
Thank you for telling me, because I thought I was sharing the slides. Apparently,
sorry,
no.
I thought you prefer.
No.
Okay.
No, it was a mistake on my side. So let me see.
Anyways, to all participants, you will have the video, the recording of the webinar, and also the presentation Juan prepared for you.
Can you see the slides now?
No.
No. Okay. So. Now?
Now.
I'm sorry. Sorry for that. I'm sorry to you and the attendance. So this is the slide, the first slide. So in the second slide, I present what I said about the SHAPE EU initiative and the EU affordable housing. And this is what I mentioned about private affordable housing, that they account for the large share of the total market, 89%. And the many initiatives, the initiative I mentioned about Lithuania, Romania, and Spain, right? So now I move to the two steps to involve financial institutions. On one side, who are the borrowers, which I explained, homeowners, homeowner associations. And then now we move to the second slide, which is the specific case, which I was explaining right now, of financing low income homeowners, which I said, because this is the main focus of the Share EU. The key issues for low incomes is they have limited or not self-financing capacity. They have low indebtedness capacity, and limited as well capacity to pay the loan. And I give the example of the Lithuania Jessica Fund, who has been a great success. I think they are in the order of hundreds of millions of euros invested in building renovation. And the type of financial product they offer is minimum or no self-financing, so that the owner doesn't have to provide any own resource. No requirement of third-party guarantee or insurance, so it's an unsecured loan. Interest rates below commercial rates. Annual debt payment expected to be less than savings and energy bills, which allows that basically what they pay for the loan is compensated by the savings in the energy bills. It has this annual debt payment takes into account the grants, which varies according to the level of energy efficiency in Lithuania, going up to 100% for very low income families, which then, so they get a loan, but they don't have to pay the loan because it's covered by the state. And then long tenors, which can go up to 20 years, so it is adapted to the life, or the maximum life of these renovations, which often includes the renovations of the facades. Now, the second step, after seeing who are the borrowers in the case of low-income borrowers, the entity that is promoting the district renovation should estimate the investment amount and the debt sizing. The total investment depends, first, when you don't own the buildings, is the capacity to convince homeowners to undertake renovations, and the level of energy performance improvements, which can account for a small part, 30% of the cost, or a larger part, it can go up to 70% of the cost, depending on the level of energy performance, right? In the case of Lithuania, the focus is on energy, and therefore they finance the energy component of those renovations. But they include other lifts and other type of renovations as well. Then an estimate of the loan amounts, which depends on the possible loan resources, if this is the case, that homeowners provide, the grants available, and also, as I mentioned, the cost neutrality of investments that influence the capacity to pay. Is good to know for financial institutions what will be this cost neutrality situation in each particular case to assess the capacity to pay by homeowners. Now I change of subject after presenting the different steps for an entity that wants to develop a district renovation of affordable housing, and I will develop the availability of public finance. Well, as public finance has played a major role in developing the renovation market in Europe for different reasons. I mean, which will come through the presentation. First, by providing concessional finance, and we have different sources of concessional finance: EU funding, cohesion policy funding, EIB, and so on. National financing as well, and we have the action of the national promotional banks in particular, who has played a significant role. For instance, the KfW in Germany, who has developed one of, I think, is the world's largest building renovation in the world, which I think they are in several hundreds of billions euros of renovation of residential buildings in Germany. Obviously, and other promotional banks. The main ways to distribute concessional finance has been through two different means: dedicated credit lines, such as the the case of KfW or the EIB, that are lines that are provided to commercial banks or other banks, public banks in different countries, her market for the renovation of buildings, right? And specialized funds. I think you cannot see the specialized funds. This is the case, for instance, of what I mentioned in the case of Lithuania. It was there are several funds that has been put in place, specialized in the renovation of residential buildings. And the second group is the de-risking of financing of renovations. And this has been developed through different public guarantees, notably risk-sharing facilities, such as private finance for energy efficiency, which provides is a risk-sharing facility that covers I think it's up to, I'm not mistaken, 80% of the losses for each individual loan, up to a certain percentage of the total portfolio of the bank. So that is a very good way to stimulate and reduce the cost of financing renovations or other, because private finance for energy efficiency covers all kinds of energy efficiency investments. Combining grants with loans, I mean, again, the case of KfW, but as well the case in France, for instance, where you have this type of initiatives. Just to note that most of the concessional finance is for energy renovations, but is limited for other type of renovations. I mean, bathrooms, structural renovations of the building. This can be a problem because over 90% of the energy renovations investments are combined with non-energy renovations. When, for instance, when a condominium decides to renovate the building, they often not just renovate the building from an energy point of view, but also from other aspects such as safety, renovating the water pipes, etc., etc. So that can be an issue to get access to concessional finance, because they will get access only to the energy part, and it's more difficult for the other parts. Now, snapshot of the commercial finance, which will be developed by ENGIE later. Many commercial banks are developing financial products to finance energy renovations in order to develop the green lending portfolio. I mean, they are pushed by, as you know, by the different directives to develop green growth, sustainable green growth, and they are intensively promoting this type of green investments, such as renovation. We will have the case of ENGIE later. They propose minimum requirements of self-financing, longer maturities, and lower interest rates than normal. Mainly is consumer loans in terms of that they are unsecured loans. Some commercial banks are willing to finance energy renovation by base and experience, which is not presented, of public finance initiatives. I mean, we have cases such as Lithuania, Poland, where initially commercial banks were not willing to lend for building renovations because they didn't understand the credit risk of financing, for instance, homeowners associations. When they saw the development of the public initiative, the credit risk history, etc., we see now that commercial banks are willing to finance those renovations in these terms. Another development is innovative finance, which will be also developed further by dual assets, such as untaxed, unbilled, or green loans, which have had a limited development up until now due to regulatory obstacles and other issues. And I think that will be developed later in the following discussion. Finally, promoters of large district renovations should select several financial institutions that can offer financing to homeowners, to have competition among them. So this is the best approach. They have to prepare an information memorandum, including feasibility studies, financial plan, borrower's characteristics, as we mentioned, possible financial packages, which they should discuss with financial institutions to be sure that they get offers. And then is it advisable to go for a competitive tender, such it was happened with Jessica funds, to select banks to carry to finance renovations. I'm going to finalize very soon, so it's just remind you some possible issues when financing district renovations of affordable housing, involving private housing. First, the main risk which we have observed when developing these district renovations is that we observe lower building renovations and therefore lower demand for financing than initially expected. And some initiatives have failed because of this lower demand than initially expected. The reasons for that are homeowners attach a low priority to energy renovations, difficult access to information and renovation by homeowners. This is why usually these initiatives are accompanied by one-stop shops or other ways to facilitate information to homeowners to identify what they have to do and who can do that for them in terms of the renovations. Limited availability of grants. We know grants are what usually triggers renovations. If you have very little grants, it is difficult. Debt aversion. We noted that and it is increased when the income decrease. So the homeowners doesn't want to take debt to finance renovations. Several surveys that has been done shows that there is this tendency of debt aversion, and we have for rental dwellings split incentives as well. This is well known. There are specific issues related to financing homeowners associations, which I explained before, and so few banks or financial institutions are willing to finance them. Financial institutions are reluctant to finance as they don't know the credit characteristics of the renovation market. I think I mentioned that. I think this is less and less as time passes. We financial institutions understand better these credit characteristics, notably, as I mentioned before, when public finance has shown through the development of the initial steps of the market those credit characteristics. Now I will stop here. I will just let me first present the discussion with participants, which will go first in the case of ENG. It will present the real estate finance initiative. I think is one of the leading banks in this area, and I think it will be interesting to know how do they see and their strategy and the way they plan to develop this market, the products that they're offering, etc. And then secondly, we'll have also, as I said, a company trying to develop the market, dual assets, and in particular with innovative products and the barriers they are facing to develop that market. Well, this is for your records the presentation of the speakers, right? Mr. Tim Brothers, I hope I pronounce it well. Mr. Michael Paclacco and Alvaro Salamanca, who will start first by presenting you more in depth than myself, Shape U initiative, and then followed by Mr. Tim Brothers, who will present the strategy of ENG, and finally Michael Pachaco. Well, thank you very much. So I give the floor now to Alvaro to present us the Share U. Thank you.
Thank you very much, Juan. Good morning to everyone. Please, Juan, could you stop sharing because
Yes.
I'm going to present the two
Sure.
slides as well.
Let me check.
Thank you.
Yeah. Thank you.
Okay. Great. So we are going to do now a short break in this webinar. Not everything is going to be regarding this topic. And in this break, I want to remind you why we are here, what Shape U's project is doing, and the main goals of Shape U project. In the same time, I will remind you also the series of webinars we are preparing and the dates for the next months, where we will have different speakers, different moderators, all experts in those topics. So for these 5 minutes, I prepared 2 slides in order to don't lose the thread. I'm going to share it with you. Yeah, here. Okay, as you all know, we are currently organizing a series of webinars for the Shape U project that is sponsored and funded by the European Commission. And the challenge is to support housing providers, small and medium enterprises, social enterprises as well, public authorities and suppliers to meet the targets of the renovation wave aimed at affordable and social housing. Today, first of all, I want to express my gratitude to Juan, to Tim, and to Michael for their willingness to participate here and the effort they are doing to share their experience with us. So thank you very much, guys. We are really happy to have you here. And let's go with the Shape U project. As you probably know, one of the main goals of Shape U in terms of financing is to provide reliable and useful information on funding to its target actors. Shape U partners, we all are convinced that the investment gap in specific cases can be overcome if the exchange between less and more advanced entities across Europe is boosted. So in this regard, shared tested and proven cases of projects that have been successfully financed through different mechanisms are one of the Shape U objectives. For this purpose, we are organizing specific webinars on 6 different topics related to financing. And the object of these webinars is to analyze different possibilities to finance large housing, district level or other renovation programs. The webinars will try to cover the main type of projects of building renovations, in particular, as I told you, successful and innovative programs regarding social and affordable housing. Finally, I would like also to refer the rest of the webinars that will take in place in the coming months, in which we will have different moderators and speakers, as I told 2 minutes ago, all of them with experts in the subject that we will be discussing. The second webinar will be held on May 10. The name of the webinar is Financing of District Level Programs Aiming at Deep Renovation of Social Housing. It's different from this webinar. We are focused 10th of May in social housing. Then on May 25, we will have Edward Puig from GNE Finance to moderate the webinar. It's our colleague. You will meet him in a bit more than a month. And the name of the webinar, it will be Financing of District Level Renovation Programs of Private Affordable Housing led by public institutions. The difference here with regarding the webinar of today is that we are talking today about private institutions. And after the summer, we will back with 3 series of webinars more. The 6th of September, we will have the financing of new district heating cooling networks. I remember Juan in the first slide tried to differentiate this webinar from the webinar we are having today. On October 10th, we will have the webinar called Financing of District Level Energy Programs in Existing Residential Housing. And the last webinar will be held the 15th of November, and the name will be the Promotion of Innovative Financing Instruments for Public Authorities. I will give the floor to Tim, but before that, I want to remind you that we habilitated 2 chats. One of them is the normal chat, the common chat you will have always on Zoom. If you have any technical problem, any issue, you can write on there, and between Benedict and I, we will solve it. And then we have also the Q&A chat. If you have some questions, if you have some doubts, or you want to suggest something, I will be in charge of transferring these questions, this suggestion to our speakers, and then the last 10-15 minutes of today, we will have time to discuss about it. So thank you very much again, and I give the floor to Tim Brothers from ING Real Estate Finance from Netherlands.
Yes, thank you, Alvaro. Can you hear me correctly?
Yeah.
Okay, well, there are already some questions in the Q&A, so I don't know if you already want to address them, or should we wait? I saw 2 questions.
I think it's better. Maybe we leave the last 10-15 minutes for all the questions, and then and now we continue with your intervention and Michael's one.
Totally fine. Yeah. So thank you for inviting me and to talk to you guys about the strategy of ING. First, I'll let you know something about myself, and then I will share some slides I have prepared. It mainly will be about the bigger picture. We will talk about the strategy of ING, is the largest bank, commercial finance bank in the Netherlands for real estate. So I think we have a major part in the Netherlands, but also worldwide. And sustainability is a major part of our strategy. Well, I'm not going to show you in a bit. For me, I'm 31 years old, and I'm working for ING for 5.5 years now. 3.5 years on the topic of sustainability as a sustainability specialist. I studied in Rotterdam, and I'm currently working on studying on a master on larger scale buildings and city management. So it's quite interesting. I'll share my screen. Please let me know if it's all working. Share screen.
Yeah, it's working.
Okay, very good. So from a point of view of ING Real Estate Finance Business Banking NL, some small numbers. We have almost 11 billion outstanding loans in the Netherlands on real estate, all kinds of real estate. Of course, we're focusing on residentials today, but we also finance offices, retail, and logistics. Residential is the largest part of our portfolio. almost half, almost 50%. Since 2015, we started with the sustainability strategy, and we are enhancing it year on year. I'll show you more in a bit. Let's have a look. Yeah, this is also a good way to start the presentation. I think real estate is a major part of the problem we're facing right now. It has a huge part in the emissions worldwide. 1/3 of the global GHG emissions and 40% of global energy usage. Therefore, we think as a financer, we have the responsibility to also be part of the solution. This is something we enhance year on year. In urban areas, the GHG emissions are almost 60% for real estate. So yeah, we're totally inventing and looking at ourselves how we can help our client improve their portfolio. It's a strategy we alter every year. Of course, we're looking at what is working, what is not working. I think a lot of examples we'll touch upon already mentioned by Juan, and some are working, some are not. But that is that's I think it's a positive thing because you improve yourself every time. Yeah, a quick look back. We started in 2015, which was really early on. We started with an app. We introduced it to our clients, where clients could look at their portfolio and they could look at the energy levels, the energy efficiency levels of the portfolio. This was the start of sustainability for the Netherlands in the real estate market. This was really new. And this was a way to show clients what the portfolio was about, but it's also a way to let clients get known to the fact of sustainability. I think that the text is quite small, but I hope I will pick out some numbers. Year on year, we enhanced that our initiatives and our strategy as well. In 2017, we went to the North Pole with our biggest 25 biggest clients. Those were skeptical about sustainability, but they came back as real sustainability ambassadors, front runners in sustainability, also showing them the real life effects of global warming in the North Pole. Really changed their mindset regarding energy efficiency and renovating their portfolio. In 2019, we applied for the ELENA grant from the European Investment Bank. It's also touched on by Juan real short. I will talk more about this in the coming slides, but it's been a major game changer for us. We could do so much more for our clients than we could ever have done. And in the on the top screen, you see top part of the screen, you see our portfolio growing year on year. We have allocated in 2018 12% of our portfolio to a green bond. That means that 12% was green by that time, meaning A label, an energy label A or better. And at this moment, we are at actually 44% of our total portfolio, like for all the assets, is an energy label A or better. I think this is really good. I will talk more about where we want to go, but you see that all our efforts have shown some great results. We're not there yet, of course not, but we're working on it. We also have a new 5-step plan. We started with it in 2016. Enhanced it in 2021. It's the same 5-step approach, but we made it better. I will also talk more about that. And also a big part of this strategy and these results is that we are at 99% of our office portfolio is legislation ready, so it has an energy label C or better. It's not for residentials, but the Dutch office market is like 60% at this time. I think this really shows that when you start early on, with talking with your clients, have a firm strategy and the right beliefs, the results will be there. This is a major thing I want to talk about with this slide. So let's look back. We talked about Elena subsidy already a bit in 2019, and in 2020 we started with it. We were the first bank in the Netherlands and the second bank in the EU, they told us. So we applied for almost 3 million. This money is available for our clients to use for new energy labels, but also for plans of action, how to improve their portfolio. And this has really been a big game changer for us, because at this time we could help our clients with getting insight in their portfolio on a basis of an object, not really on a portfolio level, but they could scan every object, see where the renovations, what type of renovations they should apply, and what were the weakest parts of the portfolio. So it's not only looking at portfolio, but looking at the offices or at the residential buildings, and it's mainly for residentials. This grant, we say to our client, look, these are the parts of your portfolio where we see potential problems or potential risks, and we want to talk to you about this, and we want to help you renovate these buildings. But before you do that, you have to get insight, and the Elena grant makes that possible. The other side of the Elena grant is that we have to invest in sustainable investment projects, almost 100 million. We are currently at almost 65, I guess, and we have another year. So we're growing on it. These are investments. These are investment loans we loan out to our clients, and these are only investments in renovating the existing buildings, existing portfolio. So typically these are residential units or condominiums or large areas with a lot of homes, where clients apply for sustainability loans to improve these residential units. They do that in not one unit at a time. It could be done, but that's not really fast and financially sound. But they do it at a lot of residential units at a time, and they improve them from an energy label E, D, or F, whatever, to an energy label A. We finance that via a special loan. I will talk to you more about in a minute, but I think I want to tell you about the last thing I want to tell you about Elena is that it's really helped us get a lot of insight, but also helped us to really push the renovation projects to our clients. It's been a really big help, and yeah, I'm really fond of it, and I think it could be a big step for other companies as well. Yeah, so where do we want to go? Like I said, we're not there yet, but we have a firm strategy. We also adapted the Paris Proof plan, a Paris Proof agreement. We have a strategy till 2030 at this moment. That's where we're heading. Of course, Paris Proof is in 2050, but we think that if you don't start now, you'll have to make such huge steps at the end of the program that it will be too hard. So we are saying to our clients that we want to have an energy label A for every office, for every unit in our portfolio by 2030. And this is a really big step. So also for the entire residential portfolio, we want to have only energy label A units in our portfolio. Of course, there are some exemptions or really hard residentials that can't get to an energy label A. That's not a deal breaker for us. We want to talk with the client. We want to finance our client. We want to finance the transition. So if the client says, okay, well, I can't go to level A, energy label A, but I can go to B, that's it. Okay, we think that's also very valid, and because you have to help the client get there and not stop talks if it's not possible. So that's the the role we want to take on as a financer, and we really want to finance a transition. So we do that year on year, step approach. Every year on, we phase out lesser energy labels, and we have plans of actions. We ask from our clients how how they get to an energy label A. So that's really also a big part, that clients are they need to hand in the plan of action, which also makes them really aware of what is asked of them, where their portfolio is at this moment and where their portfolio is going. So then you not only saying something to the client like you have to do this, but you also make the client really part of the whole transition. I think it's a bold step to ask to have every object in our portfolio an energy label A in 2030. It's going to be hard, but we're really working on it, and I think we are one of the first financiers who set this high bar. But if you don't set a high bar, you'll never reach. You'll never get there. So let's see how we will manage. You can always ask me how we're doing, but we will see. So this is our strategy. This is where we're heading. How do we do that? So how do we help the client? Because it's not us only, it's also the client. What we do is we advise them with the plan of approach. Of course, we pay for the subsidy advice as well. And then the number two is the big one. It's we finance 100% of the renovation project. So usually residential finances is at 60 or 70 loan to value. We finance 100% of the renovation that the client is facing. This is a big step as well, because the client doesn't have to use his own money. We do this for at the moment at a 1.5% discount for the interest rate. We do this for 5-year fixed. If we take a look at where the market in the Netherlands right now, it's slowing down a bit, and I think that a lot of clients are making use of this product of us because, well, they have money in the bank, but they don't have to use it. They can come to us for a loan, and they can improve their portfolio. They not only see that we want them to go to a type of trajectory. They also see the legislation facing them. So they see that the EU, with the EU taxonomy, other packages like Fit for 55, is coming to them as well, to their portfolio, that they have to comply with certain legislation and regulations. So they see the benefit of improving their portfolio. We connect them with partners, but what we typically and usually see is that clients make use of their own partners. A couple of years ago, we thought as a financer, okay, we have to help the client at every moment. So we have to help them with the construction company. We have to help them with every company we know. This is something we don't do anymore. Clients working with clients usually and typically work with their own partners, their trusted partners. We trust them as well. We are only there for the cheap loan. This is something we do best. This is something where we can influence. We are involved. So this is something we do really well, and the rest is up to the client for using his own partners. When the renovation is done, we appreciate the measures. Of course, we give the client a new energy label. So that's also on us, and typically we have improved a lot of residentials to an energy label A, and to end the entire process, we plant trees with them, so they can also compensate the part of CO2 emissions that they can't, that they still have in our real estate forest. So this is a new 5-step approach. It's how we intend to help our clients and to reach our strategy goals, and it's working really well, I have to say. Clients are really positive about this, and we see a lot of good results, I guess. Yeah, this is a bit much in detail, but I don't know if it's for this webinar, yes or no. But you can, if somebody's looking back at it, it's yeah, how do you say that? An explanation of the green loan, sustainable loan. So at the top in the chart, you see that we finance 100% of the sustainability renovation costs with discount. Yeah, we also have green loans, which they do another type of discount. I made a quick example calculation. So let's say we have an area of 500 square meters. It could also be residential, split it in multiple assets. They say we go from an energy label A with the renovation towards an energy label A. The total renovation cost is €500,000, of which 200,000 euros of the purpose is to sustainability improvements. The rest is aesthetics or maybe something else. With a regular loan at this moment, you would get 26,000 euros in costs on year. And if you split that with different products we have, you get 200,000 for the standalone, because the sustainability improvements were 200,000 euros. You get that at the discount. It will cost you 7,500. We also make use of the Green Bank ING Green Bank loan, which is you can see up in the chart how to do that. You get 500 square meters with the 450 euros per square meter discount, which gets almost 11,000 euros costs, and the rest is the remaining regular loan. So this is a difference of almost of a bit more than 4,000 euros per year for our clients. So here you see that the efforts we take with the products we invent for our clients really make a difference for the clients, because not all the clients are really big and really wealthy. For some of them, the 4,000 really makes a difference of giving a project a go or another go. Yeah, please. Yeah, I think you will get the slides, or this is recorded, so you can make your own calculations, of course. But you see the direct results in costs for our clients at this time. Yeah, and to wrap it up, of course, I had a look at how many renovation projects we did. At this time, we almost did 40 renovation projects, varying from 500,000 renovation costs till 5 million renovations cost. We almost have I thought 45 million in total renovations costs over the last years, which for me is a lot. Of course, we are enhancing the strategy and we are enhancing the products, and the sustainable loan we only have for 1.5 years right now. So it takes some time for the market to adapt this product. Of course, there has to be a moment that the client could make use of this product. When is the large-scale renovation planned? We have the problems of tenant and lessees, of course, the split incentives. It could also it needs to be possible, but yeah, we see the big plus side of these sustainable loans and our strategy. And we also try to have nice and really out there projects like this. This is a castle in the Netherlands. We are renovating it at the moment with our client, of course, to an energy label A. This is, I think, really out there. It's never been done, of course. It is a mid-century castle being renovated to an energy label A, and there's also going to be social housing in this castle. With this project and these types of projects, we're really saying to the market and to our clients, look, if we can manage this, we can manage everything, and nothing is impossible. So don't let that stop you if you find some hard issues in the path. Yeah, I think that's it for me. Really fun to talk to you about ING and how we take on different kinds of problems and our strategy. Of course, if you have any questions, please let me know. I would try to help you with all the questions. And I think, Alvaro, I did it within the 15 minutes you asked me. So
thank you very much, Tim. So in the beginning, I have left the first question to the end because I believe it's a question we can answer with among all of us. But regarding your presentation, Tim, you have 4 questions.
okay.
That I believe is the moment to answer them. So, first question, it's coming for Erki Senre,
Yeah.
and he's asking, what are the 5 steps specifically?
Yeah. So the 5 steps are like I showed them on the screen, but I would like to I can share my screen again. That's no problem. The 5 steps are as follows. Let's see. Yeah, first we advise the client. So we with the plan of action, with the scans, we show them what their portfolio is at the moment. Then we look at what are the renovation plans. You know, where can we renovate the portfolio? The second part is we finance that renovation with the sustainable loan. So at a discount for the client makes use of cheaper funding. Point 3 is we connect them with our sustainability partners, so they make use of our partner network. The fourth is that when the renovation is done, we appreciate and we measure the renovation. So we give them an energy label, and we can measure their portfolio again in our app. So they have live, they can view their portfolio live. And the 5th step is that we can compensate the CO2 emissions they still have. It's like a nice ending of the total renovation. So those are the 5 steps.
Okay, thank you. Probably Erki made the question before you saw this slide, but just in case, we answer this question again.
Yeah.
So next one is coming from an anonymous attendee.
Yeah.
And the question is ING Belgium also focused this much on renovation loans?
Yeah, well, that's hard for me to answer. Of course, I'm not working for ING Belgium, but I think we are. Yeah, they also focus on renovation loans. They do as well. Yes. And this year, you see that ING globally focuses a lot more on sustainability. So also ING Belgium has renovation goals and has to comply with Terra regulations and has to comply with showing them how the portfolio stands and has to improve year on year. So yeah.
Okay, thank you very much. And he's asking, I don't know if it's possible now, if you could share a contact person for this topic in Belgium.
Yeah, I could. That's totally fine. Maybe he can contact me afterwards. I will share them via email. I think my email will be shared also after this presentation.
Okay, great. I'm going to answer live with your email. I have it.
Yeah.
So I will share it when we finish this round of questions. Okay, next one from Bianca Momo. It's also to you, Tim.
Yeah.
She's asking, next to subsidies and financing, are you providing a meeting with energy renovation consultants?
Yeah. Yeah, we do. Yeah, we have one party that we're working very closely here in the Netherlands. It's CFP Green Buildings, and we provide a meeting with them as well. That's also on our costs as well. Yeah.
And she's finalizing saying now every homeowner has her own partners on hand.
Yeah, the homeowner is of course he can make use of his own partners. the thing is, we work with the two partners, and one of them is CFP. Of course, we have to make contracts with them for the cost and everything. So we can pay them if they make use of our own partners. If they make of our partners, if they make use of their own partners, we can't pay it. But that's up to them. We have the possibility.
Great. From another anonymous attendee.
Yeah.
Can people also get a loan if they just want to go from F to C label?
Yeah, this is a big one. No, they can't, and that is because we want to set the high bar, and we think that it is possible to go to an energy label A in the Netherlands. I think every country has different measurements for energy labels. So let's say in the Netherlands, of course, there are always exemptions, but we say we only finance it if we go to an energy label A, because we think that if you are looking forward at the Paris Proof Agreement, we all have to go there. Yeah, and we have to draw the line somewhere. And for us right now, it's energy label A. And if we don't want that our portfolio is going from an F to a C, we want it going from an F to an A. So that is what we provide for the client.
Mm-hmm. And last one, coming from Erki again.
Mm-hmm.
How are designed energy labels matching later in use measured energy labels?
How are designed energy labels matching later in use measured energy labels? So I think, does this mean after the renovation, or how are? I think he mentions that we measure energy labels in our app. We do that, and afterwards, if we have an actual energy label, it's usually one-on-one as the measurement. So it complies with each other. But otherwise, I don't understand the question. But maybe you can elaborate, or the energy labels usually match quite well. Of course, you always see some difference, but. Or is this regarding actual energy consumption? Then that's a totally different question, and I really don't know that. That's something that, of course, is something
maybe we can come back to this question after
the performance gaps. The performance gap, yeah, of course, there's a performance gap. We focus on energy transition right now.
Okay.
In the coming years, two things are becoming more important. That is physical climate risks and the actual energy consumption. So the major thing is that the Dutch legislation is really prohibiting us to view actual energy consumption right now. So that's something we don't focus on at the moment. But it's going to be.
Perfect. Many thanks, Tim. If no one has more questions to Tim, maybe if you have more questions, we can continue later after Michael. Yeah. So I give the floor to Michael Paslatko from Joule Assets, and welcome here, Michael. Welcome again, and thank you very much. And let's start. The micro. You are mute, Michael.
Here we go. I found it. Can you see my screen?
Yes, perfectly.
Oh, great. So thank you, Alvaro and Juan, for the kind invitation to present today. First of all, a quick word about myself and my company. I'm the European Director and Chief Financial Officer of Joule Assets. We have been around for the last 9 years, working on a number of European initiatives, predominantly with the European Commission under Horizon 2020 and also LIFE. In the past, also with G&E Finance, so that is also where we have a common past, working on innovative solutions for energy efficiency or sustainable energy finance more generally. Here on the slide, you can see a timeline over the last 7 years, a series of projects that have developed standardized tools, materials, contracts, risk assessment protocol, various KYC, ESG tools, predominantly for the commercial built environment, and predominantly, at least originally, geared towards the project developer community. So ESCOs, contractors who actually are on the ground doing the work. Through this journey, we have, however, also gotten more involved with what we call the end client representatives, so asset owners, building owners, housing associations, and really taking on their needs into our processes. The culmination of this is really in the latest project that we are currently undertaking in Propel on the Horizon 2020. You see the partners outlined here on the bottom, that we are incubating the Sustainable Energy Finance Association that will then host all this combined collateral on a digital platform, which will eventually be the member access platform for the association's members, really in view of creating a long-lasting ecosystem that brings these materials to the market, keeps them up to date. We have translated and transposed contracts into a number of languages and several jurisdictions in Europe. And through this journey, we have really engaged with a broad range of financial institutions, first with more the boutique focused energy efficiency, sustainable energy funds, but then also more and more with institutional investors, banks, pension funds, and others. These exchanges, this collaboration with the financial community was essential for us to really develop materials that are then tried and tested in the market and accepted by the financial community, so that we are not building something in a bubble that then doesn't really fall onto fertile ground. Through this process, we have facilitated several million worth of investments. We, as such, as Dual Assets and as this consortium, are not deploying our own funds. We are just a facilitator in the middle. And SIFA, as the association, will take this role going forward. You have a QR code here. Maybe some of you have already scanned it. This is just if you are interested in SIFA and learning more, you can subscribe to the newsletter and find more about it there. Now, just to outline a few key barriers, I really understand this presentation to be quite complementary to the one that Tim gave before, because he clearly gave us a much more hands-on view on how they are deploying their loans in sustainable real estate. What we are seeing really more generally, but also particularly in residential energy efficiency finance, is that there are obviously key risks that no financial institution can ignore, credit risk clearly being a key risk category, but others like management risk or KYC, know your customer, or the change of control or occupancy risk are clearly very important risk types in energy efficiency finance in the built environment. The split incentives have quickly been mentioned by Juan before. Clearly, there is a misalignment between landlords and tenants. Landlords would normally want to invest and improve the building fabric, but the ones that then benefit from it are the tenants. And passing through these costs, the utility bills through the rent does usually is not a very common practice, and it would then not incentivize the tenant to actually optimize their energy use. So we have a clear issue there, and there were clearly initiatives trying to overcome this issue, but not really to large success. Investment size is just generally a challenge. We look at single projects that sometimes are also less than 100,000 euros. So due diligence costs can quickly outweigh the investment returns. And here clearly the key is standardization, making products that can be replicated and scaled at the necessary pace to also include smaller investment sizes. Deep renovation, another key challenge. There are clearly multiple challenges to deep renovation projects, higher complexity or permitting in some cases, but also clearly the longer payback times. And then interest rate or changing control risk can really play a major role. There is also the risk of reaping the low-hanging fruit, meaning lighting replacement or heating replacement are just done as one-off measures and have relatively short payback time, but then without these more attractive components in a more comprehensive deep renovation project, the longer term measures become even less attractive and even more longer term. So that is a clear risk there as well, focusing too much on the low-hanging fruit. Finally, what I want to allude to as well in our work with building owners and just understanding the barriers that consumers have towards energy efficiency investments, there is a clear information barrier, again, on a number of issues, a lack of knowledge, support and advice, but there is also clearly an uncertainty of the benefits and what we call an asymmetry in the perceived financial risks. The cost outlay is clear, but what exactly the savings will be over time and over maybe also a longer term period is not always fully clear. Just a quick deeper dive also on the risk side. Clearly, I'm conscious of the time. I don't want to get too much into detail, and most of this is already clear. I have mentioned these risks as being quite important. For credit risk in particular, there is also an added component that other risk types can then have a negative impact on credit risk itself. So if we look at underperformance, if a project was not designed well, technical equipment fails, there is mismanagement, this in turn can all impact credit risk, counterparty risk as well. And depending on the contractual structure, clearly we would need to assess credit risk, not only for the building owner, but also for whoever takes on the work, implements the work, and maybe operates and maintains the equipment over time. I will skip now directly to a few slides that I have labeled with solutions, but these are clearly just a set of what we have seen being established. A number of them have been mentioned in parts as well already in Juan's presentation. And it's more food for thought to understand where could such solutions be applied, what are the benefits, what has worked, and maybe what hasn't so far. One-stop shops, clearly, we understand as quite an important component to address, for example, the information barrier. They are comprehensive assistance services, technical assistance services, but also on administrative or financial issues, help on a number of procedures, give access to the necessary information or guidance on regulation or public procurement rules, EU taxonomy, a number of issues. Such one-stop shops are getting implemented from public and private sides. Clearly, with the LNR facility, there is a very prominent example with the EIB. Recent JRC study from the Joint Research Center of the European Commission has identified more than 60 such one-stop shops already active in Europe. They usually act only locally or regionally. And clearly, they also support the building of a replicable pipeline. So the scalability, the replicability is really what is facilitated with such services. Public support, we have heard good examples before, also from Juan. Incentives can definitely help shorten payback times or mitigate the counterparty risk, act as a first loss guarantee. Some financial institutions, however, are quite reluctant in including public incentives, subsidies in their financial payback plans of their investment, simply because they have had bad experiences. This could be, also from the days of cutting feed-in tariffs, or now just recently we had an example of the 110% super bonus scheme in Italy that was just a few weeks ago cut after a couple of years. What really was the issue, I mean, in Italy, without getting into too much detail, a certain level of public support, a certain level of tax incentive was already in place before the 110%. The idea was to give 110% of the invested amount on equipment and labor back as a tax incentive over 5 years. This generally already created a bit of a bias towards more wealthy homeowners or people with more income, because at a certain threshold, such bigger amounts could just simply not be deducted in time over 5 years. So there was also the facility to sell these incentives to, for example, banks or large utility companies. However, with such a boom in the market, there were dozens of, literally dozens of new companies being formed every day throughout 2021 in particular, to undertake work and implement projects under this scheme, which clearly led to a lack of quality control, lack of oversight, and also quite simply a lack of qualified personnel and materials available to undertake so many renovations. So probably a more moderate incentive plan would have likely yielded better outcomes, not created such a bubble that it then eventually had to burst, and maybe a staggered approach to give more incentives, a higher rate of incentives to lower income houses should be contemplated as well, as we have seen in an earlier example. Going on here to more contractual or business model types of solutions, clearly tailoring is key for all sorts of financial products. We have heard a distinction already before with the single houses, multi-family houses, but then also energy poor households or public or private housing associations. These are all different types of counterparties in sustainable real estate finance. They all come with their own perks and pitfalls or opportunities. So with single houses, we clearly have generally just smaller investment sizes, and therefore, relatively speaking, per project, larger overhead costs. So a simplified process clearly is key here to just replicate and have some sort of cookie cutter replicability. And what Tim has presented before very much looks like a very streamlined process geared towards such opportunities. With multi-family homes, and this is where I'm currently located in Italy, quite a strong part of the market, there is added complexity, and it adds to the underwriting time, having everybody to agree on common measures that are implemented. But generally, they represent a larger or more interesting project size eventually, right? Because it's just a larger volume investment. Vulnerable or energy poor households clearly represent a higher counterparty risk. They have a stronger need for public support alongside the private finance component. But this has been shown in some examples that with very energy poorly efficient buildings, the savings then can actually create a positive incentive for the investment, because the payback times tends to be shorter, because just that much more energy can be saved, and that reduces the investment payback. With public and private housing associations, again, clearly better scalability, replicability, just larger volume, lower counterparty risk, with some exceptions clearly there as well, but there is also added complexity with ownership structure, internal rules, and so on. So this is something again, that we have seen also rather that private funds, energy efficiency funds, take on such investments rather than maybe going already on the individual household level. And we have also received in our work over the last years quite an uptake of interest from such housing associations approaching us in seeking third-party finance. A quick example of something more innovative or a new product that emerges clearly also currently still stronger in the commercial real estate world is servitization, so as a service contracts. These transfer ownership of equipment to the end to the contractor, so it represents basically an off-balance sheet solution. The end client, the building owner, does not take on additional debt. But these are usually single measure as a service contracts. They provide predictable cash flow, and they could also facilitate the structuring of new financial products like sale of receivables or securitization. But servitization does not seem to really facilitate deep renovation projects. So there exactly we have this issue of reaping the low-hanging fruit if we just go after single measures. And really just a final slide, again, more as a food for thought, but in Seattle, in the US, there is quite an interesting structure, MEET, it's called, Metered Energy Efficiency Transaction Structure, that really tries to overcome both the split incentive and the deep renovation challenges by basically creating a so-called energy tenant. So it decouples the building's energy use from its tenants just for rent of the space. So the energy tenant, this could be an ESCO. An ESCO, for example, has a long-term rental agreement just for the energy potential of the building with the building owner, and therefore investments into the building fabric, heating systems, and so on can be paid back over 20+ years. It all stands and falls, however, with the necessary metering infrastructure and regulatory changes. So this is still to be seen whether and where in Europe this could also be applied. It has been successfully developed and implemented in the US so far. I have left the link there. I have also just taken this scheme here from their website. So if anybody is interested in learning more about it, you have the opportunity to do so. And that is really it from my side. Thank you so much for having me, and looking forward to answering any questions you might have.
Thank you very much, Michael. For the moment, we don't have any questions regarding your presentation. Maybe we can wait, and during this time, I think we can answer the first question we received from Bianca Momo. And in this regard, she's asking, is there any research about how social boundaries affect the motivation of low-income households to renovate? I have kind of an answer for this question. I don't know if you know any official research, or you want to comment something about this. Okay, so my answer is really related to the barriers Michael explained. We don't know any official research, but under GNE experience, we discover in many cities that all the barriers Michael commented are directly related to the lack of knowledge of these owners. And this lack of knowledge is many times is the same lack of knowledge than no low-income household owners to any kind of owner. These barriers Michael explained, and the barriers we discovered in cities from Menorca, Mallorca, Rotterdam, Valencia, cities where one-stop shops were developed are regarding to, first of all, with the when they are thinking, okay, we have more expenses, and the first barrier is always regarding on money. In relation to this, we understood and we believe that the communication effort and the technical, administrative and financial support, financial advice is really important to transfer all the knowledge we experts we have in order to save these barriers that, I repeat, are the same barriers to low income householders than to rest of household owners. But regarding the lack of money, the financial advice is always the most important. And also I have here a list of other barriers related to the barriers Michael explained. And we discovered during the last years that it's not only a lack of knowledge regarding the financial issues, it's always related also to a lack of general knowledge. Household owners are asking first of all, rehabilitating what? They have also, there is a technological bridge, and they are always commenting that it's really difficult to complete the process. In this regard, the one-stop offices, shops, sorry, are doing a big effort to save this technological bridge. Also, they are thinking, they distrust the activities in Europe we are realizing to aiming the renovation wave. They are always saying, okay, is our government again spending our money, spending the money we're paying by taxes. They are also encountering difficulties in all the process, not only with the bureaucracy, not only with the financial, with all the technical aspects. And for all of them, this is a really big complication. Also, they think they don't have time. There is a lack of time for them. And in this regard, one-stop shops are helping them in saving the time they will spend by themselves. And also there are aesthetics issues that are not the most important then, but there are too many household owners that they want to change for example, the walls of their houses. And also we have to consider, and in this regard, in many countries in Spain, it's directly related to the low incomes owners, that too many of them are old people, and we discover in the last years that old people, I'm not saying anything against old people, I love old people, but they show kind of apathy to renovate their houses. So in this regard, with this list, matching with the list of the barriers Michael explained, I repeat that it's really important the communication labor we will do with all owners, and also regarding a perfect technical assistant, a perfect administrative assistant, and a perfect financial advice to save all these barriers. I don't know if my colleagues Juan, want to add something. Yeah, Juan, you can unmute. Thank you very much.
Recently, I published an article about the topic of investment in energy investments in residential buildings, and I went through the different research available, and and topics which are related to the questions. I mean, the question you said is about rules followed by most people, in particular societies, right? Which is the question. I didn't find any research exactly about this topic, but I find several research about the behavior of households when they want to decide when they decide on an energy renovation. This article is in French, but if you are interested, I can share it with you.
I don't know. Thank you, Juan.
I see that there is another question I can also cover. Are there financial mechanisms to ensure that low-income groups are included in district renovations, which I think is a very important question, because from the experience when I was working at the EIB, that was generally an issue, because low incomes avoid renovations, avoid any non-fundamental expenditure. Sorry. I remember the case of Lithuania, where there were many low incomes, or Romania as well, involved in the building renovation. In Lithuania, what they did is that they said if a low income in a building doesn't subscribe to the renovation, they may lose temporarily the grant, the subsidy, sorry, they get for heating, because in Lithuania there is a subsidy for heating. Obviously, there was this incentivized that low incomes do the renovation, and they were then, as I mentioned, well, subscribe. I mean, you need in the condominium, you need a majority of owners to undertake a renovation, so that they vote for the renovation. And subsequently, they were subsidized, as I said, depending on the income, but the lowest incomes, they were 100% subsidized. So that was a way to deal with this problem, right? In the case of Romania, they decide that the municipality of Bucharest, as I said, subsidized 100% of the cost of the renovations in private buildings. The reason being that poor households have difficulties to finance those renovations. And this is not a surprise. Low incomes, as I said, avoid being having debt, and that makes economic sense, because they are facing with the uncertainties of their income. They can lose the job, be unemployed, and if they have a debt, they will have problems, obviously, to pay the debt. So the most normal way to deal with these low incomes is to heavily subsidize the renovations. I saw some instruments, sorry, that they have been developed, like guarantees, loan guarantees for these low incomes. So to say, okay, if you take a loan and you are unable to pay, the guarantee, that will be a guarantee to the bank or to the financial institution that the loan will be will cover this risk. But these instruments, at least the ones I've seen, didn't work, because the loan comes, even if there is such a guarantee, they don't want to take any debt.
I'm thinking, Juan, about the Opengela project. We will invite one representative from Opengela for the webinar on the 25th of May. It has the same title of this webinar, but instead of led by financial private institution, is private affordable housing renovations led by public institutions. So in this regard, we we have a good friendship with the people involved in OpenGela project. It was developed in Basque Country in the north of Spain, and it's because GNE participated in this project in the creation of the one-stop shop. And in this regard, I am due to participate in that webinar in a month and a half, because
but Alvaro, first, this seminar is not just private institutions; it's all the institutions, private and public. Just this seminar now.
Okay.
And secondly, my comments didn't concern a specific project. It concerned my experience at the EIB, where I was involved in tens or even hundreds of projects. So that is, I think we have to be careful when we're dealing with this type of issues, not to be too much anecdotal, because this is why when I study these topics, I always look in surveys that covers many projects, not just few of them, because few projects, you may raise conclusions which may not be representative of a large portfolio. Just that you are aware of that.
Yeah, okay. It's just because
otherwise we are anecdotal, and for the audience we only present experience of one or two projects, while in fact there is experience of many more projects. Yeah, sorry.
Okay, it was in the regard you were commenting in the OpenGela project, and in different projects they try to replicate this scheme, but in the end they decided that they won't develop it. But in the regard of Juan, creating something that guarantee the loan or can de-risk the loan in OpenGela project, they develop a fund. It was called Social Guarantee Fund, and it was a fund created in regard of the low incomes owners, in order to receive different loans from different private institutions. And this fund was created just to guarantee in case of default, to the risk these loans, and it helped a lot in that moment. So it was a mechanism that was
I know.
there.
This is what I mentioned, Alvaro. I mentioned it's a guarantee instrument, or you can call it a fund, risk-sharing facility. Well, there are different types of guarantees, and I've seen many of them, but in general, they have had difficulties from my experience.
Yeah, it's difficult. It's difficult. I just wanted to add it.
Yeah.
Juan, Bianca Momo is asking for the link of the article you mentioned before.
I can send it to her by email.
Okay, Bianca, could you type your email, and or maybe if we don't want to show your email here, maybe I can ask to Benedict in order to know it. Here I have it here. Perfect. So if there are no more questions, I think we can conclude the webinar. Okay, thank you. Thank you very much for your attendance here. Thank you very much, Juan, Michael, Tim. As you know, I'm currently organizing the rest of the webinars. You have met me before on LinkedIn or in the website of ShapeU. If you have more concerns, more questions, more suggestions, you have my email, and I hope to see you in a month in the next webinar. So it's time to say goodbye, Michael, Tim, Juan. Thank you very much, Benedict, as well, for organizing the technical part.
Thank you.
Okay, perfect. So welcome to this first ShapeU training day. for those of you, maybe you have already participated in the first webinar this morning. It was dedicated to a financial aspect of the renovation of affordable and social housing. So this afternoon, this webinar will be dedicated to the social innovation aspect of the renovation of affordable and social housing districts. So for those of you who didn't see the slide on instructions, so this webinar is being recorded. After the end of the webinar, it will be published on ShapeEU YouTube channel, so you will be able to watch it again or share it with people that couldn't attend. Unfortunately, you cannot speak directly, so please, if you want to communicate, you can use the chat. And for questions, please prefer the Q&A section. So it's two different tools. One is just one bubble, and the other one is two bubbles. So the Q&A, it's two bubbles. And if you don't see them, maybe try to click on the three little dots on the menu. Today, so we're going to talk about the renovation of affordable and social housing district, and with a focus on social innovation. So I will start by presenting ShapeEU, even though I'm sure that most of you already know what it is. And then I will also set the stage before giving the floor to the speakers by talking about the findings from a report we did on the identification of opportunities and barriers for the renovation of social and affordable housing in the field of social innovation. So then I will give the floor to Henk Visser and Quina Kian from the Technological University of Delft that are working on guidelines on the social innovation aspect of renovation of social and affordable housing districts. And then Ezio Chiaramelo will present to you Progetto Energia, so which is a successful project in the renovation of social housing. And then you will have some time to ask questions through, of course, the chat and Q&A sections. So let's go to what is ShapeEU. ShapeEU is the European Affordable Housing Consortium. So it's 10 dedicated partners that you can see their logos here. So I'm, for example, working for Energy Cities. By the way, I didn't introduce myself. Very unprofessional of me, sorry. I'm Bénédicte Weber from Energy Cities. So this consortium is led by Housing Europe, and it's co-funded by the European Union Single Market Program. So the aim of this project is to support the EU Affordable Housing Initiative and to promote a socially inclusive renovation wave. And how it will do that? By supporting affordable and social housing providers, local authorities and SMEs to deliver lighthouse renovation districts. And how? Well, by a very full program of activities. So one of them is you're actually attending it right now. And it's going to be a full program until February 2024. You will have a peer-to-peer mentorship program with experts like Ezio Chiaramelo, who's going to speak today. You will also have, by the end of the year, guidelines or what we call blueprints in 3 different fields on tried and tested approaches, on how to plan and implement innovative renovations, and also a series of online and real-life events like this webinar and other events that I will present after the webinar. So like the 5 last minutes of the webinar. And also we will deliver policy recommendations by the end of the project. Okay, I said at the beginning, so I was going just to take like a very short time to set the stage by sharing with you the findings from a report we did on the main opportunities and barriers identified by stakeholders who worked on the renovation of social and affordable housing districts. And it's mainly the findings from interviews we did with several stakeholders and in the field of social innovation. So I separated them in 3 categories. So the first case, it's the case where buildings are owned by a public authority or a social housing innovation organization, sorry. So in this case, it seems that the main issue was to engage the local community, was to get tenants involved in the renovation process. And so mainly the communication. And that was explained by the fact that the time and resources dedicated to communication with the tenants was largely underestimated. So that's the main lessons learned that we got from people who worked in the renovation of social housing districts. And then another lessons learned was that there's a lack of co-design process, so that it was mainly a top-down process, and that tenants were not really involved in the decision process from the beginning. Then the second case, that was the case where the housing district was mainly privately owned buildings. So in this case, the problems are different, and it's more the renovation is mainly blocked by motivation problems, let's say. And the first one being that the decision-making process is difficult because there are usually in this building several owners that needs to agree on the renovation process, and they need to be convinced, and that's a difficult process. Another motivation problem is that there are also a lack of funding schemes for privately owned buildings. And the third problem, the split incentives, especially in the case where the buildings are owned by people that do not live in them, which means that they don't benefit directly from the renovation. So that's the 3 main reasons why in this case there's a motivation problem. And then the last category, so it's the problem after the renovation, which is that the rent increase because the quality of the building improve, and so it has an impact on the rent, which leads sometimes to former tenants leaving because the rent is too high for them. And so it leads to the so-called renovation and the residential segregation, so gentrification of social housing districts that become districts for higher incomes people. So that was just to set the stage. And now I'm leaving the floor to Henk Wissier and Quina Tian, who will present the blueprint.
Thank you, Benedict. Yeah, hopefully you can see our screen now. I'm sitting here together with Quina, and we will jointly present our findings of the blueprint. I will kick off, and then later Quina will present the part, and then I will do it the final part. So indeed, welcome to this part 2 of this presentation of today. It's the social innovation in renovation. We call it the blueprint. It should be used as a guideline. It's still under development. We have drafts, and we will give you a kind of overview of what we have so far. So the focus of our social innovation blueprint is on affordable and social housing districts. We focus on lower and middle income occupants, being tenants of non-profit public housing associations, not always public, but housing associations under rent control, and owner-occupiers in apartment buildings with homeowner associations. Yeah, and then mainly we work on guidelines for actors that are involved in such renovation projects. And the focus in this social innovation blueprint guideline, because there are also other guidelines, there's a technical guideline, a project implementation guideline, but in our guideline, we try to focus on how to optimize the engagement and strengthen the position of the local community in the energy renovation projects at the district level. And so we have, we've distinguished 7 different subjects in different chapters in our blueprints. First of all, it's about the regulatory framework, then about financial issues, financial models, especially about rents, etc. Then the occupants' engagement and co-creation in renovation projects. Then we also tell something about the accommodation for occupants during the renovation, being in another building or maybe in the building that is renovated. Then for the 5th part, it's the models of co-ownership for dwellings and utilities and energy communities. 6, about mediation to promote district renovations. And the 7th is focused more on things that follow from the European Bauhaus initiative, which is also all kinds of social aspects of housing neighborhoods of tomorrow. So I will present the 1st, the 6th, and the 7th part of it, and my colleague Quina the other chapters of our blueprint. So first of all, something about this regulatory framework. Of course, you can imagine there's all kinds of regulations that do affect the position of the occupants in these renovation processes. So, and every country will have its own framework, so it's difficult to give a complete overview, but we try to emphasize a few aspects of regulations that are really important for the engagement of the tenants or the occupants. And again, then the question is, how can this regulatory framework be optimized to support the occupant's position in these renovation projects before, during, and also after the renovation? And how could it be optimized to reduce the hassles for tenants in renovation? Of course, there's a lot of obstacles and hurdles to go through it, and mostly regulations can, some regulations have to be reduced, others really can facilitate the process, so there can be examples of that. And then also could be important, the regulations for rents and energy contracts after renovations. Okay, so to give you an example of what we write about in the regulatory framework is, for instance, the dilemma between how to balance between the protection of the individuals and the rights of individuals and versus the rights of, say, maybe the broader community of the need to renovate And to give you an example, this is also was part of a study visit within the Shape EU project, was in Tallinn. East Europe has a lot of owner-occupied units in communal buildings that used to be rental, but after the breakdown of the iron wall, it was all privatized and it's all individual units. And then it's difficult, of course, to start a renovation of a whole building. But the regulations in Estonia, in Tallinn, really facilitate that it's possible. So you see here also some examples on the pictures. On the right part, I don't know if it's how you see it on the screen. You see a renovated building, and this is mainly also due to the fact that the regulations there are such a way that if 50% plus one of the owners want a renovation, then it will be carried out. While in most other countries, even one participant can block a renovation. Yeah, so that's quite important that regulations can facilitate here something. And then, of course, the question is what would how to deal with the people that cannot afford it. But then, of course, there's also in terms of regulations and policies, financial support for those owners that cannot afford it. So, but this is just one example of regulations that can facilitate the renovation. We go now to the financial models, and I give the screen to Karina.
Yes, about financial models, why we need financial models for housing renovation, especially for affordable housing renovation. Benedict has just mentioned that a few barriers linking to the rent increase, lack of funding, split incentives. Therefore, we know that energy renovation for affordable housing face a major financial challenges, especially for lower and middle income occupants. They need to find appropriate and optimum financial solutions for their renovation to recover what they have to pay upfront. And especially for the tenants of a social housing, a lot of the time they do have regulation to keep the living cost neutral. So therefore, there is in need of different financial model that can actually stimulate to make sure that certain barriers in terms of rent increase, lack of funding could be recovered or could be removed. Now, why split incentives? Split incentives are linked with cost recovery issue related to energy efficiency, renovation investment upfront. And often it is in between of the misbalanced distribution of people who pay and people who would benefit from the energy saving, the costs from the energy saving. For example, the landlord would pay for the renovation, but the tenant would enjoy the energy saving resulted from the renovation. So how do we balance and make sure that there would be a goal decision for all the parties involved in terms of who pay and the sharing of the cost? Because of split incentives, therefore there is a need of different financial models to stimulate and to be able to redistribute those costs and recover the cost in certain ways. Therefore, energy performance contracting is one of the examples. Green mortgage is another example. If I just elaborate a little bit, I think most of you would be aware that energy performance contracting is one of the successful examples involving a third-party service providers to step in to be the investors for a certain building renovation to be able to get the financial support. So the company, the third party, we call it energy service company. So the ESCO company, they actually would share the saving from the energy efficiency improvement together with the building owners and the tenants. So that makes it possible to renovate and make it affordable for renovation. Same for green mortgage. That would be with lower interest rates as a mortgage to be given out to the homeowners or to the tenants or to the housing building owners to be able to renovate their home with lower interest rates. Now, a couple of examples about financial models. One is one was taking place in the Netherlands. The program is called Energy Sprong, and this is basically using the third-party ownership model, which is the energy performance contracting with external investors finance the renovation work, and the tenants would pay for a portion of the saving on the energy bills back to the investors. So the energy cost is indeed neutral. So the living cost is neutral for the tenants. And on top of that, this case also was successful because they also use one-stop shop approach to make sure that the communication, as Benedict mentioned, that the communication and the choice, the decision-making process, what would be the best energy retrofitting energy renovation solutions is communicated earlier on. So that was one of the best practices we used to show you that the financial model can be worked in this case. If you want to find more information, please follow the link. The next one is the similar example in Denmark. What happened is this program is called Energy and so this program basically provides funding for energy efficient renovation for public housing. The program itself using a combination of different sources, funding sources, such as grants, low interest rates loans, performance-based financial models. So in combination to be able to incentivize, stimulate different parties to participate, to remove the financial barriers. So that is another successful financial case here. The next one is about occupants' engagement. This is what has been mentioned by Henk also just now about the collective decision-making of 5% plus 1 to be able to collectively approve a certain kind of renovation schemes by all the occupants in a building complex. Also, at the beginning, when Benedict mentioned about the barriers, one of the barriers is about lack of co-design process, difficult in decision-making processes, difficult in communication that takes longer time. It's underestimated the difficulties in terms of this whole communication process. Therefore, we need occupants' engagement and co-creation process. Now, for a successful renovation process, it's very important to establish active engagement with occupants. The way to do that, there will be different ways, but one with the study trip, as mentioned by Henk earlier on in Tallinn, what we find out, if there is enthusiastic support from the occupants, there is a visionary people who can make decisions on the board, then things are a lot easier to decide together, to influence. So we also know that in Netherlands, probably in many other European cities, there are also very active roles about energy coach, energy ambassadors. They could actually serve the way to remove the barriers for communication. And one important note for occupants engagement is often we overlook the inclusiveness of various target groups, especially for the vulnerable groups in the housing association or affordable housing renovation, public housing. There are people with disabilities. There are people with lower incomes, people aging people, single parent, migrant background. They have special needs, and then they often also have severe struggles, especially in the context of energy crisis. So it's how do we activate those people to bring their voice, their opinion, their feedback in the decision-making process. It's very important to safeguard the success of occupants' engagement and co-creation. So successful case for that is one is in Dublin, in Ireland. In Ireland, I think one of the successful cases, this is a top-down approach from the city of Dublin. The whole idea is to have this housing regeneration program to make sure that this social housing complex, that in this case is all passive housing, which is nearly net zero energy buildings for the social housing, but also create community hub to boost the communications from early on, from the decision making, from the design phase, and throughout until the post-occupants and monitoring phase. So this is one of the successful case for the co-creation. Another couple of case, I will not dive into the detail due to the time limit, but you could say that in Austria, in Hungary, there are bottom-up and top-down case from either local engagement, as for the case of bottom-up approach, with energy community, energy cooperatives stepping in to bring people to get the information what they want, but also top-down is also quite successful in terms of to get the funding, get the expert in at early on to give information session and create activities and clubs. The next one is accommodation of occupants during the renovation. We all know that in most of the renovation project, especially for deep renovation project, it would involve facade renovation. It would involve roof renovation, insulation, window, floor. So in this kind of deep renovation, it is almost impossible to let the tenants stay in their home without disturbance, noise, dust, and replacements of certain components as well. So what is and what can be done in terms of relocating the occupants or make it hassle-free during the process is also very important for boosting the social innovation. What we find out is there are different ways and schemes. For example, multi-phase renovation. The goal is to break the renovation project into smaller, manageable phases, and each with its own schedule, well communicated early on, the budget and the scope, so that the communication and the understanding is there for the tenants or for the occupants to cooperate. And sometimes they also would have to accommodate and provide temporary housing solutions. And you can also, for example, there are also temporary housing solutions like on-set trailers of off-site apartments. This is also another solution for the accommodation of occupants during the renovation. Communication here is very important to let the building occupants understand the renovation schedules and any necessary temporary relocations, and to find out what would be the scheme that fits best for different type of vulnerable groups, as I mentioned early on. So the best way to provide those alternative accommodations are to assist the offset rental housing, assist the offsite participation for relocation, and of course, it's also quite important to understand for the tenants, they don't like to move. So it's also very important because they are familiar with the surrounding area. If it is possible to do the relocation in the same building of the same complex. So a couple of examples here. One is in the PAX, Hungary, there is urban rehabilitation program, which is very successful. It is a top-down from the municipality of PAX in Hungary to boost to improve the segment of the whole city in the east part of the city. So what they've done is they wanted to make sure that they have a moving and a relocation plan for the occupants, and the program was was communicated well in advance of 6 months prior to the construction work for the occupants who needs to be relocated. The next example is very nice. I urge everyone who are interested to click the link and see the YouTube video that is connected. It is one of the projects that was built after the Second World War in 1973, and a lot of the occupants who lived there for like 40+ years. And this is total bottom-up social cooperative plus the residents' commitment. Very nice program to say that, okay, in what creative ways relocation is not necessary at all, and how to have this mixed complex community life that keep people live there for 40+ years. So the next one is models for co-ownership for the dwellings. Why we need co-ownership for social innovation in our blueprint. It's very important. We all know that now more and more energy cooperatives are vital in this whole upscaling of the renovation for especially affordable housing, and co-ownership models for dwelling and utility and energy communities can play such an important role for affordable housing. This model can help to improve the financial feasibilities of energy renovation by pooling resources and sharing costs among the community members. So, and we also know that it's very important to make sure that the collective decision-making processes are smooth. So how do we get, for example, 50+1 to approved for energy renovation schemes? In the Netherlands, we need 70% for the owner-occupied housing, and also 70% for the housing association to agree on of the vote from the tenants to agree on energy retrofitting. So it's very important to make sure that there is a long-term kind of cooperative cooperation between the renovation between the occupants and the tenants, and also the housing association, in terms of what they agreed on and how they can take the ownership of the renovation done. One of the example here is called the Bucher Energy Berlin. It's an energy cooperative based in Berlin that promote ownership for renewable energy resources and energy efficient building renovation. So what they do is they allow the residents to become members of participating in the decision-making processes, but also they would benefit from the costs of saving of the energy cost saving of the energy, even the energy price that has been earned from it. So another example we collected here is the Energy Leap program. A similar program for deep renovation of affordable housing. This is the program is an energy cooperative program to make the housing stock in the Netherlands more efficient, such as the energy efficiency measures, such as the insulation, heating system upgrading, renewable energy system like solar panel. What they do is they invite and let the residents involved in the decision-making of the planning for the renovation, as well as taking the ownership, getting the bonus, and taking care of the maintenance of the energy efficiency systems. So that's it.
Okay, thank you, Quina. That were the parts that Quina presented. And then we have still 2 more paragraphs of our blueprint to go. The number 6 is about mediation to promote district renovation. So when we have neighborhoods with a lot of different people, of course, different types, different levels of income, different possibilities, the opinions of where to go for will be different. So it's very important to build the community, and we can need mediators and mediation techniques to align all the different interests, and so that you can bring the interests of the people together. For instance, facilitating community participation. Mediation can be used to create a forum for community members. That's very important to bring all the ideas together, and it also helps to build trust and understanding among the stakeholders. There might be disputes, and they have to be resolved, and mediation can be used, of course, to try to find solutions. Mostly mediators are neutral third parties, and hopefully they are trusted by most of the people in the community, so that it's important to create some kind of common understanding of the goals and the way to go forward. And it always also will encourage collaboration. And of course, that is really needed, especially when you go for renovation on district level. So there are also some interesting examples. One of them is in Aalborg, Denmark. It's a cooperative model focused on large-scale renovation of social disadvantaged living areas. It's the long-term strategy based on co-creation that will ensure a good life for the inhabitants in the area. And many positive changes there have been recorded, which are due to significant physical improvements, a new health center offering public and private services, and the involvement of local business community. And probably here also have been mediation played an important role to give a focus on all these quality improvements on the neighborhood level. Another example is this one in Halle, Belgium. Sorry. Knauf Energy Solutions is the company that completed a large, deep retrofit of physical performance, total of 184 homes for social housing company Woonpunt in Zennevallen. There also mediation played an important role. The examples are all in the links where you can find more information about the projects. And as Benedict mentioned, this whole presentation will be recorded, so you can also see the slides and find the links over there. Now we go to the final chapter that's related to the new European Bauhaus initiative. You probably know about the Bauhaus initiative in the 20s in Germany. Based on those ideas is also a European program where the affordable housing program will also connect to. And in this new European Bauhaus, they also stress on all kinds of values in neighborhoods. You know, most of the retrofits are driven by increasing the energy performance. The affordable program also has to make sure that we keep a large stock which is affordable. And the new European Bauhaus brings also elements in this that about the livability in the neighborhoods, the social values, the architectural quality of the buildings, which are also important to create good, successful neighborhood renovations. So it's also about engaging citizens, job creation, also jobs for people in these neighborhoods, and also creating new financial models, community engagement, and education and training for housing organizations and residents. Here are also some examples, one in Sevilla in Spain, and the other one in Portugal, Matosinhos. or I don't know exactly how to pronounce it. I'm not going to explain you these examples because of time. We went through our time for presenting our social innovation blueprint. Even 2 more examples in Italy and in Belgium. So what we mentioned in advance, that it's still in preparation, the whole blueprint development. So we also looking for mentors for the program that give more input to, and there's a possibility to sign up as a mentor. And you can also find another link for support where you can apply for support. Further questions, also some links, email addresses. And besides Quina and me, we also want to emphasize that Dr. Zhengxuan Liu and PhD Stephanie Horian are really supportive for this project that we are working on. So that's on behalf of us, and I give the floor back to Benedict, or maybe directly to the next speaker.
Yes, thank you, Henk. Indeed, let's give the floor to Ezio Chiaramelo, who's going to present the successfully renovated districts in Turin within Progetto Energia. So I'll let you share your screen.
Okay. Did you see it?
I don't see it.
We are ready? Yeah. Okay, I'm Ezio Chiaramelo, and I'm in charge of the operation of the Acea Energie Nuove. We are a public company owned by 47 municipalities in the neighborhood of Torino.
Ezio, sorry, you're not sharing your screen. I don't know if it's a...
Sorry.
I mean, I thought you wanted to share something.
Oh, okay, if you want to share, you...
Ah.
Okay.
No, but we don't see it.
Ah, I'm sorry.
It's okay.
Okay. Did you see it?
Not yet, but yes, it works now. Thanks. Sorry for interrupting.
Oh. Okay. Now, okay. We are an energy saving company as Technozenit, our technical partner, and we since 5 or 6 years ago we are trying to thinking about which is the better way to make an effort to improve the energy impact of the heating, also the cooling of the buildings that we are work for. We are a net supplier of energy, electrical energy and gas, natural gas, but we wanted to change our main business, starting not to sell the energy, but sell the energy efficiency at least. We to redevelop the building, we follow biological steps, and starting to how to reduce in the maximum way, which is the thermal needing of the buildings. So we provide the strong insulation of the roof, of the external parts of the buildings, and also of the cellar. We use different technologies, starting to insufflation of the external walls, or putting the insulation wall on the buildings, or simply the insulation with a polyester wall. After this step, we choose. Okay. which is the better way to satisfy the lower need of the energy source. We identify the renewable energy sources produced in place, the better the better way to reduce the carbon footprint and use the energy need of the buildings. So we put photovoltaic plants on the roof of the buildings. It depends of the how much is big the buildings, but we start to 20 till to 50 kilowatts for buildings, and use the heating pump to produce the thermal need for the heating in the winter, in the certain way producing cooling for the summertime. We installed in each flat that we have in the buildings a building automation system to optimize the energy flows, in particular the electrical energy flows within the buildings, and the relation with the buildings, with the network, the electrical energy network. For this, we introduce a multi-apartment consumption models. This is a typical way to a renewable electric energy company, limited in the buildings, and to maximize, as I said, the exchange with the production system and the consumption of each single flat, and exploited an Italian law that encouraged this type of consuming to reduce the loss on the network, the electrical network. They pay an incentive each megawatt of consumption consumed within the buildings. We have this is our first solution. I'm sorry. Okay, we don't need we don't not only need the photovoltaic plants on the roof, but we also the thermal producing of the hot water system for hygienic use. On the left, you can see the building how is before the treatment. This is a building around 50 or 60 in the 19th century. And on the right, you can see after the treatment. But how to improve more? We have done 30 buildings at the project at the moment, all around our region, but we are going to provide the construction to extend our model to all over Italy. But how to improve our model? We see a more integrated system of the buildings within different types of buildings and different types of production of electrical energy renewable. We imagine public administration buildings, schools, sports plants, or a system of mobility, or as we can imagine, the electrical recharge of the cars, or the electrical recharge of the public system of transport. And also, I put the eolic in the slide, but we don't have in the difference of Netherlands or the Nordic country, we have a few in the north of Italy. We have a few possibilities to install aeolic system, but we can imagine biomass system as wood or agriculture source of energy. Okay, we have to integrate the system, which is the way to, which is the better way to create an integrated system. We involving the citizen as a consumer, but also as a producer, to do what a model towards the energy, create a model of social inclusion. We saw that the people who lives in the renewed buildings have a more sensitiveness as on energy issues. They are more they know better than before which is the right way to use the energy. They know, for instance, they use the energy and the day when the photovoltaic plants produce, then consume in the night as before. To do this, we can, as I said, involve the citizen, but we have to invest in the municipality or the private owners have to invest to sustainable system of production of energy. As I said, the incentive that the Italian law provides for the energy consumed within the buildings has a redistributive effect, and this economic benefit can be given to the single owner, the single tenant, but better, the single tenant of the building for they have to pay the bill for the electrical energy of the natural gas, as we said in this past winter. We have an internet page as Progetto Energia. I'm sorry. Progetto Energia, at the moment, it's only in Italian, as we said, that might very low, very low knowledge of English, as I demonstrated now, but we have also internet pages of our society. We are happy to have been here with you. We know that we have to learn a lot of the different experience all over Europe, and we are available to show our experience to the other country or to the other single experience. We have I saw Lina in the participants of this meeting. We have a visit of the Lithuanian Vilnius municipality 1 month ago, more or less, and we are available to receive the visit of the others, so the visitor of the different experiences that we have seen before. I conclude my. I think yes, I conclude.
Thank you so much, Ezio. So now it's time for questions. So you can write the question in the Q&A section or in the chat. But as I said, it's better to use the Q&A. So far, I don't see any from the participants. So maybe Ezio, would like to know, I mean, what's the plan for Progetto Energia now?
Okay.
What's your prospect?
Okay. Last week we were in Italian Parliament to show our experience, and we are going to make an agreement with the system cooperation system of enterprise cooperations that they are active in the renovation building. And so we, according to the changement of Italian law in this team, because we are passing through an over incentives of Italian governments and no incentive of Italian government. When Italian government will decide what we do about redevelopment building incentives, we are going to undersign this kind of agreement to repeat. In Italy, we have more than 1,200,000 buildings, and I think that less than 1% is in E-class, as the European directive require. When the incentive scheme will be clear, we are going to we will have a boost up to extend our experience all over Italy with the constructor, with this cooperative system of constructor, and we will do not 30, but maybe 30,000 buildings to the redevelopment.
So, a lot of things to do.
Yeah.
We have a question for Quina and Henk. How was the support for those who can't afford the renovations in Tallinn organized and financed?
So how it's financed? Yeah, that's a good question, but difficult for me to answer. Of course, we were there, we got a whole explanation, but I'm not aware of all the institutions and regulations. Maybe we can have a look for a link of that Estonia. I mean, that what is important in Estonia is a very active organization that gives support to all the homeowner associations. And they probably have all the detailed answers on how it's organized. Yeah.
Yeah, it's because the Tallinn case is very special because the government is funding, gives subsidies for the whole renovation project. So landed to each household, it's like 50 euro or something. So it is not like you have to pay a lot of money. So that is in my recollections, it is so little, only that the owners association has to facilitate in a way that during the renovation process there would be hassles for the noise, for the, for example, there will be for a period of time it's difficult to live as normal. Then that is the major concern. But for the financial aspect in Tallinn, I think because it's owner occupied for the affordable housing, and it's 99%, they are owner occupied. So for this type of renovation, also government heavily subsidized. So the financial aspect from what we've learned is actually not so so big of a concern to individual. Yeah.
It seems it was clear. Yes. So still no other questions. I hope that participants can find the Q&A section to ask their questions. I also saw that Anu from EKIL was in the participants, so I was wondering if she could also provide a part of the answer, but I also don't want to put her under the spotlight, so I'm waiting for her authorization. Maybe Henk and Quina, I know you already said that, but could you repeat maybe the timeline for the blueprint for the rest of the, I mean, when is it going to be out, and what are the next steps?
Good question. I think it should be finalized by the end of the year completely. So there, we making steps in between. The next phase will be May 2nd. So we had a draft. We organized a workshop around it. We got some new inputs. Yeah, also we got more and more inputs for best practices, which are in the blueprints. We then have more agreement on the format, how it will look like. So we have some iteration schemes. I think it will also be sent to DG Growth in May. They will also come with additional questions and remarks, and we will have further iterations. And then there will be other sessions also where it will be presented and dealt with public. In Barcelona, social housing event, and later in Vienna there will be kind of a workshop. So there and then there will be also the mentors that can give some input. So it will be modified a little bit more. We also still have our own criticism on our own work, but have to find time to make it better. So there are still some. Okay, there's now a question from Edith Lakatos. Can you say more about the festival, the social housing festival in Barcelona? I think it's mainly on the 8th and the 9th of, maybe also starting on the 7th. I'm not completely sure about it.
So
you're sharing the dates now?
Yes. So the housing festival in Barcelona, so in my calendar, it's under the tech camp. Because we're going to ShapeEU, the ShapeEU consortium is going to mainly organize sessions on the technical aspects of the renovation, but it's going to be within a bigger housing festival. Which for that I'm not able to answer actually. I know that you can find more information on the ShapeEU website.
And it will also have its own website, I think, Social Housing Festival Barcelona.
Maybe I can also invite Joao to join the panel if he wants to intervene. So. For the hello, Joao.
Hello.
I'm sorry, it's a bit unexpected.
Yeah, no worries.
I think you're the best person to answer this question.
Yeah, about the International Social Housing Festival or the tech app, or both?
That the question I think was about the festival. I mean, that's how it was formulated.
Yeah, so from the 7th to the 9th of June 2023, we will have what is the flagship event for the affordable social housing sector, called this festival, so International Social Housing Festival. It will be there will be a variety of different events, anything related to the sector. Basically, it's quite difficult to encapsulate everything that will happen there in Barcelona, even because we have received about 180 applications. So it will be quite, as the name says, a festival of events. Among these events, on the 8th and 9th of June, the tech camp will take place that you have there on the screen. And the tech camp, as some of you have been saying, is essentially to go through the more technical and technological parts of our blueprints, discuss it with the practitioners, tell you what we have come up in terms of guidelines so far, a bit like Henk and Queen have been telling you for the social innovation part. But as the name says, we won't discuss so much the social aspect, even though it's should always be a part of the integrated approach to renovation. But we will go through more the technologies. So what technologies to consider, what roadmap, so what pathway of technology we need to achieve decarbonization of our housing stock, circularity, serialized renovation, all these different ways that we have been talking in the last years of to decarbonize our stock. So yeah, again, the festival 7 to 9, a plethora of events there. And on the 8th and 9th, one event in particular, the Affordable Housing Initiative Tech Camp. So I hope, Benedict, this answered your questions. And,
well, I hope it answered Edith's question as well, but I think so. Thank you, Joel.
Thank you.
So I take this opportunity to present the rest of the dates. So within the next month, we have the second training day that will take place on the 10th of May. That will this time focus on the technical and technological blueprint. And also there will be the second financial webinar as well on the same day. So once again, like the same format with the training day in the morning and the financial webinar in the afternoon. Then a third financial webinar on the 25th of May. Then the tech camp, so the in-person event that will take place during the housing festival in Barcelona that Joao just mentioned. And then we have the Affordable Housing Initiative Summit in Paris with one day before a study tour for which we have a call for participants that is open right now until the end of the month. So if you're interested, I urge you to apply. You can find a link on the ShapeU website. We will visit two interesting renovated districts in Paris, Caserne de Reuilly and Glacière d'Avielle. And of course, I mean, if you come to the study tour, that's also a good opportunity to go to the summit on the next day, which will focus on finance. So that's the program before the summer break, let's say. And then we have more events to go after the break. So more training days with the rest of the blueprints. A boot camp in Vienna and another study tour. So all of this you can find on the ShapeU website. I wanted to ask because Henk, you also mentioned the mentorship program. So maybe could you repeat that as well? I mean, I think it's still open.
Yeah, actually, yeah, maybe even João could answer it better, like how it will be organized. But I think there is a possibility for mentors to sign up, and we'll use this group of mentors to get feedback on the blueprint. But I don't know exactly in which phase that will be.
Yeah, maybe I can say something about that. Yeah. So yeah, we have a mentorship program and a support program. Both are linked, obviously. So such interesting examples like the one from Proyecto Energía, we are using to invite the promoters of those projects to act as mentors to other less experienced leaders managers of social and affordable housing across Europe. And well, at the moment, we have received a lot of applications already. So I would say that particular first phase of collecting the applications is almost finished. And now we have the considerable task of matching the mentors and the supported districts. And this is the phase that we are at the moment. We have a lot of applications, a lot of areas of interest, and now it's our work to, as soon as possible, to suggest mentors to meet the project promoters to help them. So anyone who has registered for the application program, pay attention to your email, because sooner or later my colleague Margarita Marinelli will get in touch with you with some suggestions of mentors and project promoters. So it will happen this week or next week in principle. So pay attention to your email.
Thank you, Joao. So we don't have any questions. So unless the panelists want to say a few more words, I think we can stop here.
Maybe a final word. Yeah, thank you for your attention. And yeah, as mentioned, the slides will be uploaded with the whole recording. There are links in the slides to us. So if you have additional ideas or remarks or very interesting projects, you can always send it to us, and we try to incorporate in the blueprints. Thank you.
Thank you so much. Have a nice rest of the afternoon, and see you in our upcoming events.
Okay.
Thank you.
Bye.
Thank you to everybody.